the cost of house purchase, Module 2, Types of Home Loans. There are many types of home loans, and each type will determine how lenders calculate your monthly payment. There are three main types: fixed-rate mortgages, balloon loans, and adjustable-rate mortgages. A fixed-rate mortgage is calculated so that if you keep the loan for the full term, for example, 15 years, and you make all of your payments, you will have successfully paid off the loan by the end of the term. A balloon loan is used for loan terms that are much shorter than usual, about 5 years. However, the monthly payments are calculated as if the loan is for much longer, usually 30 years. Because of this, the monthly payments don't actually add up to the total amount owed, so at the end of the loan term, you're required to pay the remainder of the balance. For example, if you had a $300,000 loan with an interest rate of 5% for 30 years, your monthly principal and interest payment would be $1,610. If you were doing a 5-year balloon loan, you would pay that $1,610 per month for 5 years, but then you would owe the remainder of the loan at the end of the 5th year. Finally, we have adjustable rate loans. They are similar to fixed-rate mortgages, except for the interest rate can fluctuate periodically based on market conditions. They can be beneficial because your initial borrowing costs are less than they would be for a fixed-rate mortgage, but you also run the risk of interest rates going up. However, there is a cap on the amount of interest that you pay, which protects you from being subject to paying excessively high rates. In addition to conventional mortgage loans, there are also Federal Housing Administration loans, Department of Veterans Affairs loans, U.S. Department of Agriculture loans, and jumbo loans. Federal Housing Administration loans are a great option for first-time homebuyers and buyers with low credit scores because they only require a 3.5% down payment and approve lower credit scores. A credit rating of 500 is the minimum that can be accepted for FHA loans. Veterans Affairs loans are only available to homebuyers who are military veterans, current military members, or their spouses. VA loans don't have any requirements for minimum down payment or credit scores, and also have some of the lowest interest rates that you can find. USDA loans are reserved for buyers in specific areas, typically rural parts of the country. USDA loans don't require any down payment, but borrowers must fall below the set income threshold for their community. Jumbo loans are mortgages for more expensive properties that exceed the limits of conventional loans. The requirements for jumbo loans vary by area and lender, but typically have more strict credit score and down payment requirements. There are many different loan types, and each one has different associated timeline and costs. The three main types of home loans are fixed-rate mortgages, balloon loans, and adjustable-rate mortgages. There are also specialty loan types including FHA loans, VA loans, USDA loans, and jumbo loans.